Hello, my name is Steve Bigelow with the Candlestick Forum. This week we saw some very powerful candlestick reversal signals. One of the best signals that are illustrated by reversals is the candlestick kicker signal. So this week we saw the market when it did the reversal signal down here, broke through the 50-day moving average, and then had the opportunity to show reversals with a shooting star doji. And what do we need to see on those signals? We need to see confirmation. However, when we woke up on Friday morning, the pre-market futures are showing new strength, and that was based upon some of the earnings reports on Apple and Intel. Also, this is why you always want to wait for confirmation. The NASDAQ formed a bearish flutter kicker signal on Thursday. A bearish flutter kicker signal is your bullish candle. The next day, they gap down at or below the previous day's open. Do a doji. Now, remember your doji rule. The price will usually move in the direction of how they open after a doji. That was a very strong indication the sellers were in control. However, there is one final aspect to candlestick signals. They need confirmation. So when we saw the NASDAQ open lower, getting ready to short, however, immediately it started trading positive, which would be illustrated by the green candle, and kept right on going. So what is the assessment at this point? That negative bearish signal has been negated, making the uptrend still in progress and the possibility of it coming back up to the NASDAQ coming up to the 50-day moving average to test. Same scenario on the S&P 500. What looked like could be selling or resistance at the 50-day moving average with an evening star type signal with one final criteria. Notice how they bounced up off the T-line and traded above that level. Remember our ultimate T-line rule. You can stay long until you see a sell signal and a close below the T-line. The fact that the S&P 500 opened and traded positive basically changed this from a sell signal to kind of a double doji setup. And again, notice how it's supported right smack dab on the T-line. The T-line is probably one of your most effective indicators showing what's occurring in investor sentiment when you use it in conjunction with candlestick signals. Possibility of your next target being up here, kind of coinciding with that recent high. We've had some strong sectors still revealing themselves: consumer electronics, semiconductors, and then on the short side, we have industrial metals. Now, the consumer electronics was led by Apple. Apple on Thursday afternoon, when they announced their earnings, which showed they beat in every category, traded down much lower. But we always get the question, do you trade anything after hours? And the answer is no, because that's not everybody's decision. That's just traders' decisions. What we want to see is what is everybody's decision, which is they can make that decision or show that decision when the market opens. This is a very strong entry point. If you're in a downtrend and they gap up and start trading positive, that kicker signal reveals as a very high probability the bulls are stepping right back in, one of your strongest reversal signals. The other consumer electronics, as you can see, are these. Take a look at those charts. Same thing on the semiconductors. Whoops, needed to change that. Whoops, need to change that back. There should be Intel, not Steel Dynamics. Notice the Intel chart did a fry pan bottom, And what breaks out a fry pan bottom? A strong bullish sentiment. And what's your strongest reversal signal? The candlestick kicker signal. This tells you want to be buying on positive trading because of this buildup and then this signal. At least your next target would be up in this range, but usually what comes out of a fry pan bottom is a very strong price move. Take a look at these also. They were all also confirming with good, strong signals. And you can short tech, TECK. Look at your bearish flutter kicker signal. Failure right at the 200, making this a strong downtrend. Others in that sector, Vail, BHP, Gato, and Rio. So be ready to short this one on weakness tomorrow. Now the signals, the best signals that you can identify is, remember, out of the 50 or 60 candlestick signals, there's only 12 that you really need to learn. And one of those is the doji. Notice all the indecision down here forming your fry pan bottom. This is a very high probability breakout trade where you can see doji's fry pan bottom. Now got kind of a double doji sandwich, implying that if this opens positive on Monday, your next target is likely up here to the 50-day moving average. Same scenario on our recommendation on NRIX. Look at all your dojis down here in the oversold area, kind of doing a fry pan bottom. That's your likely target. Remember, if one doji represents indecision, a series of dojis represents much greater indecision. Observe the obvious. Sava supporting right smack dab on the 50-day moving average. Stochastics coming up. This one is another one that can be bought because what are candlestick signals illustrating? That they, meaning the market, is buying support here at the 50-day moving average, breaking the downtrend T-line, buy on positive trading, a very high probability trade setup. Same scenario on the short side. Call this observe the obvious. Bearish Harami, bearish engulfing signal, right smack dab on a level that everybody else is watching. Stochastics rolling over, then followed by a bearish doji sandwich. Remember, the doji sandwich illustrates a high probability there's going to be more in that direction. So once you learn the 12 major signals using the stochastics or RSI, whatever you prefer, and then the T-line is your confirmation, you dramatically improve the probabilities of being in the right direction at the right time. That'll be it. We'll see you in the chat rooms.